So I'm going to go over trade management first, just because my way is pretty simple. It's pretty flexible, like my overall approach as well. And I'll go through, how do I manage trades? There's a lot of different ways. So ideally, you want to be holding your winners a bit longer and cutting your losses a bit shorter. If you see most of my losses, I try to close it before it hits my stop loss, because a lot of the time when you're in a trade and it's going against you, you kind of know that it's unlikely to play out in your favor. So if we have just a typical trade where you have a shift of structure, maybe there's a previous area of interest, overall direction is bearish, there's maybe a level, you have a reaction, you have an entry, take that entry into that, stop above the high. So the reason the stop is above the high, because think of our entry model, it's that shift, we're waiting for maybe a high to be broken and then price to volume to come in and then break this low here. So you want that volume to come in. This is just indicating that price or volume has come in. There's been a shift in low time frame direction, because normally I'm entering on the 1 or the 5 minute. So this is the entry. Maybe my entry isn't perfect. Then price goes in my direction. The reason the stop is above the high is because if we make a new low and then break the high here, that's a pretty clear indication that I was wrong and price is going to continue bullish. So placing that stop above the high is a pretty simple way of just managing risk. And I find it's a good area to put your stop loss as well. Why do I wait for a pullback for the entry? You can enter on the breakout. Sometimes it just won't pull back and it'll go in your favor. This is where kind of adapting to volume comes in. I always wait for a pullback because, again, this gives me the opportunity to manage my trade better. So when we break this low here, I can trail my stop to above this high. Just because the exact same thing happens, like our entry. We're entering off that shift. If we have a shift in the opposite direction, it takes out the high there. Likely, it's going to reverse against me. So that's pretty much the reason behind that, because we're entering on breaks the structure, managing trades of breaks the structure. You want your trade management to be similar to how you analyze and enter a trade. You want it to be consistent, if that kind of makes sense. And if you have any questions as well, just put them in the chat, or you can unmute and ask questions, whatever's easiest. So that's for trailing a stop. You can trail a stop with low time frame structure, because we want to be entering trades with volume. We don't want to be holding trades where it's kind of rangy, it's going back and forth. I like to be in and out. I like to know the outcome quickly. I'm okay with taking a small loss. It's always a good thing. Losing less than you initially risked, even though the trade might have went in your favor, I find it's good practice for psychology. You're reinforcing the right behaviors. So for managing this trade, you can trail the stop at low time frame structure because you're entering with volume. Sometimes it will stop you out and then go in your favor. That's just the reality of it. But when it does happen, most likely it is going to reverse. Think about it. If you're trailing your stop loss, your half the time, I would say, your losses are going to be smaller than what you initially risked. So the easiest way to improve your risk to reward isn't by targeting more, it's by losing less. Because when you lose less, each profit is proportionally or relatively bigger. So I can double my win rate, or let's say increase it by a third. So increase my risk to reward by a third if half the time I lose half as much. Like that's more of a quarter. I'm not very good at maths, but this is just the way behind that. And every loss is a good thing. Every loss is a learning. I want to have that learning, have that opportunity to improve my system for costing less, so losing less. Additionally, when the trade is going in your favor, let's say if you think it's got some room to move in your favor, you can also add to that trade. So if you're trailing a stop with a high, you can enter another position. You can enter on half the size if you want to keep the risk the same. I find most of the time if I'm entering on half the size in the second position and I'm trailing my stop at that previous high, it's normally around my initial risk, which is like, depending on the account, if you're trading a small account like a big account, if you're just trading a prop firm, if you're trading a big account or amount of money that you care about losing, 1%, keep it around 1%. We'll kind of go through that as well. But adding to winners, cutting losses early, these are just really good habits to be in, because if you want to be in the top 10% of traders, if you want to beat the bottom 90%, yes, you can try do what the top 10% do. You don't really know what they do, but you know what the bottom 90% do. They hold losses longer than they hold wins. They're hoping. They're fearful. So you should be fearful when you're in a losing trade. You should be hopeful when you're in a winning trade. Most people, so 25,000 traders, 43 million trades. Most people win more than they lose, but they lose double as much as they win. So even those little things going against human behavior, our psychology is wired for us to lose money in these markets. So you need to do the opposite of that. I have a pretty small target. So my targets are based off structure. They're not fixed. But normally the average is around 1.5. 1.5 risk to reward. I win enough to be confident. I lose enough to not be overly confident. You're not trying to get the highest win rate per se. You're trying to get a win rate that suits your psychology. A lot of people target really high risk to rewards, and they think, yes, now I don't have to win as much. It's pushed a lot that you should have a high risk to reward, but there will always be a trade-off. The higher you target, the more likely you are to lose. It's not necessarily a bad thing. I've spoken to people who have 9, 10 risk to rewards, but they only win 20% of the time. It's a profitable system, but are you okay with losing 8, 9, 10 times in a row? Even with a 50% win rate system, you have to be comfortable with the 50% win rate. Let's say that's 1 to 2. That's profitable. You have to be okay with losing 6 trades in a row. In a 50 trade period, remember this is just a game of probabilities. There is no certainty. Your 97% chance of losing 6 losses or losing 6 trades in a row on a 50% win rate system. Most people have around 50% win rate, so this is extremely likely. And then when you're going through this in the moment, where maybe you're going through a loss streak, you might think there's something wrong, or I'm doing something wrong. You might start doubting your system. When the reality is that you have to be okay with going through these streaks and not changing anything to be profitable. And this is the hard part. What are you thinking after 3 wins? We're thinking, yeah, I'm trading really well. This is really working. I'm going to make so much money. I finally made it. And then what about after 3 losses? Complete opposite. So we'll kind of go into this in the more the psychology section, but you want a target, a risk to rewards, that's where you win a good amount, but you don't lose too much. It has to be really how often do you want to win, and how big do you want to win. There's always going to be a trade-off. The less you target, the higher your win rate, and vice versa. That's just why I target 1.5. There's opportunities for me to target 5, 6, 8, 10. But do you want to feel the pain of watching a winning trade reverse and take out your stop loss, or do you want the pain of closing a winning trade early and then it going on in your favor? You don't really get to avoid pain, but you get to choose what you get to like. If you're more okay with closing early, or you really, I really hate watching a winning trade reverse on me. Something I really hate. So closing a bit early, having more probabilities in my favor, is something that suits me. So, and obviously, like, if you're stacking timeframes, there's always going to be, like, you can trade this way with a higher win rate, lower risk reward. You can trade this process with a lower win rate, high risk reward, or you can not have a take profit. You don't have you're not really caring about risk reward. You're just trailing your stops. You're maybe adding to winners, cutting losses early. Maybe you're partialing. You might trail a stop with a partial at a level that you think it might react to. There's a lot of different ways to manage. Find a way that suits your psychology. For me, it's smaller targets. For you, you might like winning a bit more, a bit bigger, but less often. It's about, adapting to that. And also another thing, a big thing to keep in mind, especially with targets, is that volume matters. If it's low volume times, if it's more range bound, or even if you're counter trend, the targets should be a little bit less. Price is going to likely to continue doing what it has been doing. So it's kind of like a snowball. If it's kind of rolling down a hill, it takes more and more energy to stop it. So it's going to continue doing what it has been doing. If it's ranging, it's likely to continue ranging. Volume, continue volume. That's why sticking with the trend, all that sort of stuff, adapting to market conditions and volume is such a big thing. That's why targets, risk rewards will always be different based off structure. So that's risk reward. Risk reward affects your win rate. Win rate affects your possibility of a loss streak, which affects your average max drawdown. So your trade management affects your risk management because it's affecting your win rate. So like stacking timeframes, if I'm taking like let's say a 1 minute trade, we have let's say that the hourly or the daily is looking really bullish. If I was going to take a sell here, this is against the overall high time frame. Maybe this is the daily or the hourly, 4 hourly bullish trend. This could be maybe with, this is like more of a counter trend move of that. So it's not with the high time frames. It's with maybe the 1 minute, 5 minute, 30 minute maybe. Do that. If you're with the overall high time frame direction, you take an entry with a stop below the low. You've got more time frames aligning. So you've got the 1 minute aligning with the high time frames. It's like that shift with an overall high time frame continuation. Yeah. So if you're trading with high time frames, possibility to hold your trade. This is very intuitive as well. Where do you think price is going over the next 10 minutes, the next day, the next 5 minutes? It's all time based as well. So volume, direction on different time frames, and what do you want your win rate to be as well. So that's everything to keep in mind. Because your win rate will, depending on if you're trading prop firms, if you're trading a live account, it's going to differ. The way you trade prop firms is going to differ from the way you trade a live account because, and it depends on how you're trading the live account. So if you're taking it more of a high risk approach, trying to maybe flip it or compound it quickly, the risk of ruin is going to be higher. If you're risking 5-10%, you only have 10 or 20 trades. Exactly the same on a prop firm. If you're risking 1% on a prop firm, technically you're risking 10% of the account because you only have 10% max drawdown. So that's something to keep in mind. Think about it. Yeah. Think about it in a prop firm. You have 10% max drawdown. So technically you're trying to almost double the account. Sometimes it's 8% profit target, 10%. You're trying to double 80, 100% of the account. So risk kind of affects that. So I would say, how many of you are trading prop firms, or just put in the chat if you're trading a prop firm or if you're trading a live account, or maybe both. They can kind of go over risk management for each. Yeah. So for prop firms, technically if you're risking 1%, you're risking 10% of the account. So we'll kind of just go through that. If you have around a 50% win rate, it's likely you're going to lose 6 times in a row over a 50 trade period. So you can risk 1% because you have 10% to work with. If you lose 6 trades in a row, you still have 4% to work with. Commissions, maybe it's less than that. If you have a 65, 70% win rate, you can risk 1.5, 2%. The higher the win rate, the more you can risk, but the risk to reward will still be a bit lower. You can still have a high win rate and go through 3 losses in a row. If it's 2%, 2 down, 6%, the same as the 50% win rate. So there's unique, I guess, opportunities to both. With a low risk reward, high win rate, it takes more trades to pass. With a low win rate, high risk reward, if you have a win streak, you can pass pretty quickly. If you're okay with blowing the account, especially a prop firm, if you're 50% win rate 1 to 2, if you're risking 2%, it's only 2 trades to pass phase 1. So I did that in the past. It depends. Your risk depends on a lot of different variables. A win rate is a big thing. Risk reward is slightly less bigger. And your psychology, it depends on, are you a risk taker? Are you more fearful? Are you more greedy? If it's too low, it can be a bit boring. If it's too high, it can be excessively stressful. So you don't want it to be in the sweet spot, kind of like flow. So probabilities, your psychology, what type of psychology do you have, and how much are you risking? If it's a big prop firm account, and if you care about losing it, you should risk less. If it's smaller, risk more. If you've got multiple prop firm accounts and you're trying to add another, you don't really care if you lose because you can use the profits to buy another, you can risk more to speed it up. Just accepting, being intentional about how you risk, and keep it consistent, because it's probabilities. There's going to be a random distribution of wins and losses. You don't know if the next trade is going to be a win or a loss. So 50% win rate 1 to 2. It's a random distribution of wins and losses. Technically, if you're going through this kind of more losing period, you're doing the exact same thing as this winning period. It's just probabilities. Conditions will change. Sometimes there'll be more profitable ways, because not every approach works that perfectly well in every condition. My shift of structure with direction area of interest, that works well when volume isn't too high, so it's not that high that price just goes without a pullback. So you need volume to be a little bit lower to actually get that pullback. This is why for me, even though Asia isn't the highest volume, it's the lowest volume session of the day. A lot of people don't like it because of that. It's more range bound. Yes, But if I'm trading the second hour of Asia, there's good enough volume there for a breaker structure and a pullback consistently. It consistently happens. You're not trying to trade perfectly, you're trying to trade consistently. These conditions I found for me at this time work for this approach. And it suits my psychology as well. So that's more risk management with that trade management. So this is why I kind of like, if you don't know your win rate on certain setups, so a type 3, 73% win rate over 80 trades. I think I might look at this. So this is kind of the go-to setup. A type 3 with DXY correlation, 83% win rate. If it's a prop firm, I can easily risk 2% on this. And if you look at the targets, it's around 1, 2, 1.5. The average is going to be around, look, it's around 1.1. Actually, this takes into account the losses. So the average win is 1.5. Around 1.5. Yeah. And the average loss is around 0.8. So I lose less than I initially risk. And I win around 1.5 times. So, with a high win rate. So it is possible. It's just around trade management, cutting your losses a bit early, maybe adding to your wins in that. So 80% win rate over 31 trades. I'm able to risk a lot higher because of that. And you can only find this through having a journal. How are you supposed to know that your win rate off a type of setup if you're not tracking what you're doing? How are you supposed to decide on how much you're going to risk if you don't know your win rate? So know the stats that underlie your system. When you know the stats, if you go through a period of losing trades, if you go through 3 or 4 losses in a row, it's a lot easier to go through that because you know this is just a part of the process. If the losing streak is a bit too long, then you might know that there's something wrong. This is why data collection, getting a better understanding of your system, it's not about learning more price action, it's about getting more understanding. And that comes from journaling, having a plan, practice, preparation, all that sort of stuff. So that's kind of more trade management, that's risk management as well. So it's all kind of, in trading, everything's connected with your system. It's all connected. The thing that makes it work is your intuition as well. Intuition is a feeling. Your feelings can be degraded by other feelings such as fear and greed. I guarantee you though, the more prepared you are, the more confident you will be. The more confident you are, the less psychological issues you will have. Think about if you're doing a public speaking event and you're not prepared, you haven't written anything down, you don't know what you're going to talk about, you have a right to be anxious. If you've practiced this speech 1,000 times, you've written it down, you know it off by heart, it's a lot easier to be confident. Maybe you're looking forward to it instead of dreading it. Just in anything in life, the more prepared you are, the better. So having a deep understanding of what works for you, what specific actions do you know that if I just take trades based off this shift, projection over interest, with some DXY correlation, it's unreasonable for me not to be confident in that. And then, when you know what works, you can only know what works by doing what doesn't, journaling, collecting data. When you know what works, now trading just becomes about executing on that every day, doing the same thing. This approach is adaptable to conditions, but you're trying to just do the same thing every day. And more practice, the easier it is. You get to the point where it's boring. Trading for me is pretty boring. I'm just trying to do the same thing every day. It's sort of waiting. Most of the time I'm just waiting. But this is why I love this approach. This entry model, my favorite entry model, it's a lot easier for me to wait for trades because I don't have to look at the charts. I can set an alert, and at like a high and a low, say it's a high and a low. If we break a high, I get alerted. I can move or if we make a new low, break a high, I can move my alert with that low. So trailing that alert with the low, I get alerted in when price has that shift. Then I can just look for an entry on that pullback, stop above the high. It's very simple, very easy, very adaptable, and it suits my psychology. And this just came from trial and error, practice, and journaling. So these alerts make it really easy for me to wait for my setup and not have to look at the charts. Yeah, it's like where price is kind of like reacting to. So I think like the high time frames and the low time frames, they're not different things. They're the same thing. They're really connected. Think about the lower time frame you go, you're not seeing different things. You're just seeing it in more detail. The low time frames are just more detailed versions of the high time frame candles. So this low time frame structure might look like two candles where you have like a close here. So it's just like structure simplified. The low time frame you go, you're not seeing a different thing. It's just more detail. So yeah, it's just like where price is reaction to. You can use bodies, you can use wicks. All the time you can like refine onto like lower time frames. But yeah. So with more psychology, recognizing that no emotion is a bad emotion. So intuition, you might think, is good. It makes you profitable. That gut feeling, you kind of need that. Fear and greed, you'd think that's bad. It maybe leads you to close trades early over risk. Maybe anger, that leads you to break your rules. I find these emotions are just more data points. If you kind of listen to the emotion, it's actually telling you something. Telling you that you need to work on something. A part of your system isn't good enough. Most of the time. Sometimes it's just emotion. Like you're fearing a loss or a win turning into a loss. But most of the time, emotions arise and you can't fix them because you don't have a clear approach. You don't clearly know what you're trying to do each day. It's not defined exactly what you're trying to look for. You don't actually know what you're trying to do. So I guarantee you, for most of you, who, if you don't have a written down plan that's extremely clear and defined about what you're doing at certain times, what you're trading, when you're trading, what reasons are you taking for a trade, what confluences, anything. If you don't clearly know what you're doing, so you've developed an edge, you have clarity, it's personal, suits your psychology, you've done the preparation, you've done this preparation, evaluation, execution, improving, all that sort of stuff. So having a plan, having a journal, tracking the execution, tracking how that plan's going. If you're not doing that, psychology isn't your issue. You should be anxious, you should be fearful, you should be greedy, you should get angry because you don't really know what you're doing. which is kind of just going in circles. Once you have a consistent plan that you know works, maybe from a bit of forward testing, live trading with a smaller account, if you collected that data, you know it works, you know what you need to be doing, but then you can't actually do it when the risk is on the line. That's where psychology comes in. These problems are only problems when you've done the work. So you need that kind of technical, that risk, all that sort of preparation done. So I'll kind of just go through some tools for psychology. So pretty much every problem related to psychology comes down from attachment to the outcome. You're really attached to winning, you're trying to avoid losing. So losses are uncomfortable, wins are comfortable. It feels good, it's good on the ego, it's good on the bank account. And that's based off a belief. The foundation of all your psychology is your beliefs, your expectations, then your thoughts affect your actions, and that's kind of the process there. So working on your beliefs, you can't really control the mind. You can't control the mind with the mind. You can work through your beliefs and try to focus on integrating new ones. One such belief is that you're trying to focus on the internal reward. So that's the process. Surrendering to the markets, letting go of the outcome. I don't care what happens in this trade. I'm just trying to execute my plan to the best of my ability. Detach yourself from the external and then reward yourself on good processes. So that might be holding a trade when you want to close it early, like when it's winning, being aware. So as well, a major thing is awareness. How are you supposed to change something if you're not aware of it? Awareness is one of the fundamental things as well with your beliefs. So some tools: journaling your thoughts. So not just journaling trades, journaling your thoughts. Mental rehearsal. Meditation. It doesn't have to be like full meditation. It's just sitting with yourself, sitting with your thoughts. Your thoughts aren't you. They're reactions to certain stimuli. Thinking isn't a thought comes into your head that maybe I should take a trade here. Thinking is more active in that sense. It doesn't just randomly pop into your head. Thinking is more metacognition, thinking about thoughts. Why am I thinking this? Why am I believing this? So, especially in the sense of fear, anger, kind of greed. So going back to, you can't control the mind with the mind. How do you kind of get some control over it? How do you get some awareness over it? When you're trading, emotions, a lot of people say it's like kind of mental, psychology, all that sort of stuff. Emotions are physical sensations first. Emotions present themselves as physical sensations, which then lead to that fear, that anxiety. So an example is that if you're in a trade, it's going against you, or if it's in profit, you're getting a bit fearful about it reversing on you. The first thing you're going to notice is that your breath starts to get shallower. You start to breathe a bit quicker. Maybe you start sweating. Maybe you feel your heartbeat increasing. If you're risking a lot on a trade, just be aware of what's your heartbeat doing. How are you breathing? Are you breathing shallower? Most likely, yes. When you're fearful, your breath will be shallower. And this is kind of like a double whammy in the sense that when your breath gets shallower and you get fearful, you're also getting less oxygenation of your blood. So you're getting less oxygen to your brain, which leads you to be more emotional and less rational. So it's double whammy. Focusing on your breathing, controlling your breath, maybe some box breathing, or being intentional about breathing deeper into the stomach. That can help a lot with emotions because you're centering yourself on the rational, trying to stay away from the emotional. So remember, you can't control the mind with the mind. You have to control it with the physical. Another example, so controlling with the breath. Another example is if you're getting heated emotionally, trying to control or fight against those emotions is the worst thing that you can do. Taking a step back physically, going into another room. If you're tilted, doing something else is another way to control those emotions. So that's more a tool. But yeah. A lot of these psychological issues come from you holding to contradictory beliefs. So cognitive dissonance, where you hold one belief that contradicts with another, such as I need to be winning. Winning is good, but in order to win every time, that's an outcome-based thing that you can't control. You might think that sticking to my process is good, doing the same thing every day is good. You have these two contradictory beliefs. Winning every day might be closing a winning trade early, whereas sticking to your plan is holding that winning trade even if it reverses and results in a loss. Contradictory beliefs, that results in psychological issues such as fear and greed. So being aware of that, what are your beliefs? What are your expectations? Do you expect each day to be a winning day? Do you go into each day thinking about trying to make a winning trade instead of following your process? So detaching yourself from the outcome, the things you can't control, and focusing on the process. It's a lot easier said than done, but if you want to trade long term, if you want to trade sustainably, this will make it a lot easier. So preparation, expectations, controlling the mind with the body, and then we'll kind of go into how do you kind of set good expectations. So especially with prop firms, I find this happens a lot. I think everyone that I've talked to in regards to prop firms, they've all done this. So let's say you're up 3% on a challenge. You're trying to get to the 8% to pass. And you think about how good it would be to be funded, making a bunch of that money. You go into the day, think about, okay, average winner is 1 to 2. If I take a win, so I'm currently at 3% up on a challenge. If I take a win, I'll be at 5%, and that'll feel really good. And then I'll just be that much closer to passing and getting everything I want. You've kind of seen that expectation that you want to win to be up 5%. You're focusing on winning. So when you lose, which is inevitable, you're going to get that pain. So let's say 1 times the pain from that loss. Losses always kind of hurt a bit, ego-wise, money-wise, that sort of thing. But because you've set that expectation of it being a win and it feeling a certain way, that fantasy, you're focusing on that. That's now, that 1 times the pain from that loss is now 2 times the pain, because that expectation is being ripped away from you. Think about how you felt when something didn't meet your expectations. It was always worse than it actually was. So instead of it just being 2 times the pain, I find it's more 2.5 times the pain, because the expectations aren't being met. This is pretty toxic and leads to a lot of psychological issues. You're a lot more emotionally volatile when you're setting wrong expectations. People say set low expectations. Might be a bit pessimistic, but it's a lot more sustainable. So this is all thinking about a win, trying to win every day, focusing on what you can't control, setting wrong expectations, positive expectations, but still hurtful ones. It feels good to expect this, to think about, visualize this. How do you counteract that? You just do the opposite. So before each day, visualize yourself taking a trade. So I took this trade, kind of going my direction. I've entered above the high. I'm visualizing this in as much detail. I'm up 3% on the account. I risked 1%. It's kind of going my direction. Then it's kind of going against me. In as much detail, I'm visualizing that. Takes up my stop loss. If you want to be extra hard on myself, it takes up my stop loss and then goes in my direction. that could be one of the worst case scenarios. I'm visualizing that. I'm expecting that. If this were to happen, this is me just following my plan. If it were to happen, that's okay. I visualize this. I practice this mentally in my head in a calm set of mind. It's actually really not that bad when I go through it. Even in this, when I was visualizing this, I felt my heart rate increasing. My breath getting a bit shallower. Practicing deeper breathing, being calm when visualizing this. You're setting a positive expectation around, even if I follow all my rules and it loses, I take a losing trade, it's still okay. I'm still calm. I'm collected. I'm training my brain to be okay with the worst outcome possible. Confidence doesn't come from knowing a certain outcome or it being the positive outcome every single time. Confidence comes from you knowing that the worst possible outcome will and can happen and being okay with that. Being perfectly fine with a loss happening, expecting that to happen. Go into each day expecting to lose. Thinking about how that will affect your trading. Maybe try it out for a couple of days. Be intentional and set that expectation of, yes, likely we are to lose, and that's perfectly fine. I'll be happy with that. Trying to rewrite those beliefs. And it takes practice. It takes experience. You can't intellectualize it. You have to experience it. How does it feel? So that's more psychology, some tools. And if you have any questions, just put them in the chat as well. Think about it. All these, like letting my loss run, closing my wins early, all of this, it's to avoid pain. Every problem or mistake that you make in trading in regards to psychology, even in regards to not being prepared, it's just to avoid pain, it's to avoid boredom. If it's human nature to avoid effort and pain, but you need to go against that humanness if you want to be profitable. It's difficult. People don't fail because they don't know enough about technical analysis. They fail because of their mindset and because they're unable to accept pain. So, yeah. When you know what you need to do, you can close that gap using some of those tools. So, there's always going to be a gap there. For me, there's still a gap. I'm trying to close that gap day by day. But when you know what you need to do, it's just about doing it. And being comfortable, being uncomfortable. So, kind of went over that. Trade management, risk management, that psychology, thinking in probabilities, developing a probabilistic mindset that if you have a 50% win rate, think about every trade you take, you're just flipping a coin. And yeah, would you get angry if you flipped a coin? You said it was going to be heads and then it landed tails. No, you wouldn't, because you can control the outcome. Surrender to the markets and it'll be a lot easier. So, yeah, discomfort, pain. Learning to lose small. People like to win more often than they lose. Learning to lose consistently small and win sometimes big. For me, my wins aren't necessarily that big, but they're bigger than my losses. It's just a good place to be in. And yeah, just the right risk. Good trading decisions, not good outcomes. So, over the long term, good trading decisions will lead to long-term good outcomes. And you're not trying to control your emotions, you're just trying to master it. Yeah, I don't really think about liquidity traps. I guess it's kind of more smart money. I just trade like price action and intuition. That's more like why something is like, it's kind of like thinking about maybe why it's happening, like liquidity traps, all that sort of stuff. I just trade what I see. I don't really care why it might be happening. If you find it works, and if you found an edge in it, stick to it. There's many different ways to trade. Find what you like to trade. Yeah. Like technically, some people think like this way is like a bit smart money, that shift. Depending on the time frame, smart money concepts, ICT. I think some people think it's like a Judas swing or silver bullet or like a liquidity grab, all that sort of stuff. It's just patterns. Trading is just about pattern recognition. And this on its own, this shift, doesn't have any statistical edge. It only works with your intuition around direction, area of interest. Where do you think price is likely to move over the next day? Where do you think it's going to react to? And when do you want to enter, which is the entry model. So, yeah. That's the whole approach to that trade management, risk management, and psychology. There's always a lot to speak about on psychology. So, yeah. If you just do this, internally reward yourself, it'll get a whole lot easier on your mental. But if there's no more questions, you can quickly put them in the chat. I'll probably just wrap it up there, and I'll upload this recording to the website as well. So if anyone wants to go over that again. But yeah, if there's any questions, all good. Okay, I'll catch you guys on Wednesday for the call. On the Wednesday, I'll go through kind of some trades, recapping some trades, and if you want me to go over your trades as well, I'll probably go over any trades that are put in the trading floor chat. So if you want me to review, give feedback on your trades, that's all good as well. But I'll catch you guys later. Best of luck for the upcoming week as well. So, see ya.